You've been telling yourself over and over again that you want to learn more about stocks. Well, now is finally the time. You're at the right place because by the end of this video, I'm going to make it so simple and put it in such an easy way to understand it that you'll be investing in stocks by tonight. Stocks can seem very overwhelming at first, but I promise you the hardest part is just getting started. Once you're in, you'll realize that you should have started long ago. Well, now today's the day. So let's get right into it. What's up, YouTube? If you don't know me by now, my name is Javon. I'm a CPA, and over here on this channel, we make investing and finance so simple that the everyday person can pick it up, watch one of these videos, and understand it. I don't use the confusing jargon. I don't try to impress people with big words. Only thing I want is for the everyday person to watch one of these videos, not know anything about stocks, and to be able to understand what I'm talking about. All I ask is that if you find anything useful from this video, that you hit the like button down there, just so this video reaches other people who want to learn more about stocks like yourself. So in this video, I'm going to cover what stocks are, why you should invest in stocks, how to get started in stocks. I'm going to walk you through what app to download, how to actually buy your first stock, and we're going to do it step by step. And then to end the video, I'm going to give you 3 tips to get started on your stock investing journey, as well as mistakes to avoid. Those mistakes in the beginning are crucial and they are a learning experience, so why not learn from my experience instead of making the mistakes on your own? So first things first, what is a stock? You can think of a stock as a company. So just imagine that we have a pie here, right? And one pie, that is a stock. And each slice of that pie are called shares. So let me repeat that. The stock, AKA the company, is the whole pie. And each slice of that pie are called shares. When you're buying shares of a stock, you're literally buying ownership in that specific company. For example, let's say that I'm interested in buying shares of Nike stock. If I go to my Robinhood app and I buy shares of Nike, I'm literally a part owner of Nike. Granted, it may be a small ownership, probably like 0.0000009, but granted, I'm still an owner of Nike. That's how stocks work. Now, whether Nike does good or bad after that, I share part of that success or failure. But obviously, we hope that the stock goes up after we buy it. Keep in mind that not every company is available to be brought as a stock. And what I mean by that is, your local gym, they're probably not available on the stock market. On the stock market, these companies are all public corporations that allow the general public to purchase shares of their company. If they're not on the stock market, that means they're a private company and you're not available to buy shares. If you're ever thinking about a company that you like and you're wondering if they're on the stock market, don't worry, all it takes is a quick Google search like we have right here. So to recap that again, think of a stock like the whole pie and think of shares like slices of the pie. And when you buy a piece, that's you buying shares of that company. Let's move on to why you should invest. Now, why should you invest? I like to ask a question, why shouldn't you invest? Think about it like this. Let's say right now you know nothing about stocks and your money is probably in a savings account, or you probably have no money. That's okay too. We'll get there one day. So the average savings account rate in the United States is 0.41%. That means if you keep $1,000 in your savings account, by the end of the year, you would have made $4.10. So your initial investment of $1,000 would have only made you $4.10 for the entire year. You can't even get a Big Mac meal with that. But here's the kicker, you're not even going to see that increase. So while your money is growing at 0.41%, guess what's happening on the other side? Inflation. If you don't know what inflation is basically how much more expensive things get over time. And the average rate of inflation is about 2 to 3%. That means that every single year, your money is getting 2 to 3% weaker. So if you have your savings account over here growing at 0.41%, but you have things as a whole getting 2 to 3% more expensive each year, you're not doing anything. This inflation is completely wiping away all your gains that you have on the 0.41%. You're getting nowhere. That is why stocks are so important. The average return rate for the stock market since the beginning is around 10%. You're not gonna get anywhere with that 0.41%. What you need is that 10% average return in the stock market, and then you find yourself being able to battle that 2 to 3% inflation. And let me tell you, that 10% is compounded each year. So if you make 10% on the 10% that you made last year, that's gonna continue growing and growing and growing. Let me show you an example of that. One question that I always get asked is, how much money do I need to start investing? For some reason, people think that you need thousands of dollars to start investing, when quite frankly, you can get started with as little as $10, $50, whatever. In this example, we're gonna go through someone who has $100 to their name. So we're gonna start them at putting $100 in the stock market, and let's say we want them to hold that $100 in the stock market for 10 years. And the average rate of return, like I said, is going to be 10%. And since this person is just starting their investment journey, we're gonna make it so that every single month, this person is investing $100 into their account. That's $100 every month for 10 years. Now let's see what their return is. So if a person started with $100 and they continue to invest $100 every month for 10 years at an average rate of 10%, they will have $19,380. In total, this person would have only invested $12,100 of their own money, and they would have profited $7,200 just by keeping their money in the stock market and not doing anything with it. $7,200 by doing nothing, but just continuing to invest each and every month, staying consistent. Now let's look at that same calculation, but instead this time, let's imagine that we put the money into the savings account earning 0.41% each year. Let's see how much we would have earned in the savings account. If you kept that money in the savings account for 10 years, you would have only earned $228. Now compare that to the $7,200 that we just talked about. It's a no-brainer. $228 is barely enough to cover groceries for a family for a week. That $7,200 though, that's gonna cover rent for a couple months. I think the decision is clear. Let's move on to how to get started in stocks, which is what most of you click this video for. One app that I always recommend to beginners is an app called Robinhood. This is a free app that allows you to buy stocks, buy crypto, buy anything you want. Well, maybe not anything, but it allows you to buy stocks and crypto, and it allows you to do that for free with no trading fees whatsoever. The thing that I like so much about this app is that it's so simple and the user face is so user friendly. No matter what phone you have, it's gonna be in your app store. So what you're gonna do is you're gonna pull your phone out, and we're gonna walk through how to get Robinhood on your phone, and you're gonna set up your own account. So go to your phone and hit the app store. Maybe not yet. Maybe you want to finish watching this video and hit the thumbs up button down there if you're liking this video and if you're taking something from it. But I'm going to walk you guys through that. So here I'm going to go to the app store. You want to go to the search option down here, and what you want to do is you want to search for Robinhood. So right there, it should be right at the top. You're going to download Robinhood. Now once you get on Robinhood, what you want to do is you want to make an account. This should take no more than 10 minutes. So they're gonna ask you things like your name, your social security number, your address, and don't be alarmed, this is not a scam. I know a lot of people who first get started in stocks, they're probably like, why do I have to put in my social security number? It's because the stock market is heavily regulated and you have to be an actual person to create an account. I know a lot of people when they get started, they're like really hesitant. They're like really like, okay, is this a scam? No, it's not. This is just real money that's being played with here. So after you create an account, what you want to do is you want to click this person down here in the bottom right. So like I said, you create your account. That should take about 10 minutes. They may have to verify you. That may take less than an hour. If it takes a few days, it takes a few days, but I highly doubt it. But after you do that, you click the 3 bars on the top left. What we're going to do is we're going to make sure that you can add money to your account. Now, like I said earlier, it doesn't take a lot of money to get started in investing. When I first started investing years and years ago, the first amount that I added to my account was $10. So after you click those 3 bars, what you're gonna do is you're gonna go to transfer, and then you're gonna click deposit. Now for this step, if you just create an account, you may have to add in your banking account number and your routing number. After you do that and you connect your bank, then you can add in whatever amount that you want to get started. For this, I recommend only adding a little bit. One rule of investing is never invest more than you're willing to use. But for this video, if you're really a beginner and you're just getting started, I recommend something like pocket change, $10, $5, whatever amount that you want. But this is just for an example. If you get more comfortable later on down the line, then you can add however much money you want. But just know, this is not financial advice. Now that you have money in your account, you can begin to buy stocks. So what you're gonna do is you're gonna go to the home page, and then you can hit the search feature, and then you can start to search for companies that you like. Now for this example, I'm gonna keep it as Nike stock. So if I search for Nike, you see that there it pops up. So Nike stock right now is at $68. Now one thing to keep in mind is that you don't have to have $68 to buy Nike stock. You don't have to have a full 68. What you can do is you can take whatever money you have and buy a percentage of Nike stock. So that $10 can still make me an owner of Nike stock. So what you do is you just click the trade button in the bottom right, and then you click buy. And then you enter the amount of money that you want to buy of Nike stock. Here in this example, you can see that $10 gets me 0.145% of Nike. That is a very small piece of the pie, but at the end of the day, guys, that's still a piece of the pie, and we're just getting started. After that, all you do is swipe up, and then it's yours. Keep in mind, the stock market is not open 24/7. You can only purchase stocks Monday through Friday, 9:30 a.m. Eastern Time to 4 p.m. Eastern Time. During those hours, you're able to buy whatever stock you want. The stock market is also closed on weekends and holidays. That's one thing to keep in mind. Since I'm recording this video on a Saturday, I'm unable to buy Nike stock, but but on Monday at 9:30 a.m. Eastern time, I'm able to put that order through. Now that you have an account and you're able to actually buy stocks, let's talk a little bit about different types of stocks. So when I talk about Nike, that's an individual stock. Something like Tesla, Amazon, Walmart, those are individual companies that you can buy on the stock market. Now for beginners, a lot of people recommend buying index funds. Now what index funds are is that they're a collection of stocks all in one, and they just follow the average rate of those stocks combined. So for example, right now, instead of buying just Nike stock, I can buy a collection of the 500 largest public companies in the United States, and that's called the S&P 500. So if you're someone who likes to play it safe, which is what a lot of people recommend, is instead of buying one singular stock, you can just buy an index fund and you can avoid a lot of risk that way. I recommend the S&P 500 for a lot of beginners because one, like I said, it's the collection of the 500 largest public companies in the United States. Betting against this stock is pretty much betting against the United States of America. If you think the United States will continue to thrive, then this is pretty much a good choice. Now, if you think that we have some downtimes coming, maybe a war, maybe a depression coming, then it's best to avoid this stock. But historically, the S&P 500 returns an average rate of 10% every single year. On Robinhood, this can be found by using the ticker symbol VOO. And you can see that over the past 5 years, this stock has continued to rise, but of course they had some downtimes in the middle of that. No stock just goes up all the time, guys. That's one thing that you have to learn. But like I said, the S&P 500 historically has an average rate of return of 10%. That doesn't mean that 10% is guaranteed every year. That means it's on average. Some years it may be up only 5%. Other years it may be up 15, 25%, or even down 5%. So you always have to keep that in mind. So to wrap that up, once you have your account and you have your account funded, you can either choose companies that you believe in like Nike, Tesla, Amazon, or other public companies, or you can choose to play it safe and invest in things like the S&P 500 or other ETFs. If you ever want to find other ETFs, all you have to do is use Google and search types of ETF on the stock market. Since that's a little more detailed, I won't be going over that in this video, but if you guys are interested, I can always make a video like that in the future. Now that you have the knowledge of what a stock is, you have your brokerage account set up, you have your account funded, and you know how to buy stocks, let's move on to 3 tips for people who are just getting started in stock investing. My number 1 tip is only invest in things that you understand. Now this may sound extremely simple, but trust me guys, knowing this tip will save you a lot of heartache in the future. Now what I mean by this is, if you know nothing about plutonium, but you see a plutonium stock going up 1,000% year over year, of course that's gonna make you a little bit intrigued and say, I wanna go up 1,000% each year, but you know nothing about plutonium. So what you wanna do is you wanna do your own research. Just because you know nothing about plutonium now, doesn't mean you won't know anything about it next week. So before you just throw money into that stock blindly, what you wanna do is you wanna do your own research on Google, find out more about it, find out what's increasing demand in the plutonium market. I'm gonna stop saying that word, but find out what's increasing demand for that item, and then continue to invest in yourself and your knowledge. I've seen this happen hundreds of times, guys. If you're someone who knows a lot about solar energy, then maybe you might be interested in solar energy stocks. You may know something that the rest of us don't know. That's one of the keys to being a great investor, guys. Always using the knowledge that you have. And if you don't have the knowledge, continue to seek it. Right now, a lot of my stocks are around artificial intelligence. And to start off, I didn't know anything about AI, but now I do. Now for tip number 2, this is think long-term and not short-term. Now I know it's so easy when you put that first $10 into your account and you're thinking that you're gonna be a millionaire by the end of the year, but chances are you're not. This is going to be a journey, and I don't wanna sound cliche, but there are gonna be a lot of ups and downs. The stock market is not a get-rich-quick scheme at all. Consistency is always going to win in the stock market. You have to continue to invest and invest more. If you take losses, you have to learn from those losses, continue to teach yourself, invest more, and then continue to learn. I can't stress that enough. When I first started out, I was losing on stupid stocks. I had Sprint, I had Fitbit. I don't even know if they're still in business. You're going to take losses. It's gonna happen eventually. No one is undefeated in the stock market. But the beauty of the stock market is all it takes is being right one time. That's all it takes. You can be right 100 times, but if you're right that one time and you're right big, that could change your life. Tip number 3 is big. This one is don't invest money that you cannot afford to lose. This is not gambling, guys. This is the real deal. You're not at the casino here. This is the stock market. Do not put in more money that you cannot afford to lose. Any dollar that you put in the stock market, what I like to do is I like to assume that it's already gone. If you can't handle that, then you shouldn't be investing that money. And you can't put a dollar amount on this because it's all relative to each and every person. The most important thing about this is you have to know that the stock market is not a guaranteed paycheck. There are people who went to school for years and years and years, and I'm talking Ivy League, and they manage billions of dollars for their clients. And even they're wrong sometimes. Actually, they're wrong a majority of the time. Always be realistic with yourself and never overinvest. But if you do that and you hit big, just throw your boy a couple dollars, all right? Just do me that quick favor and hit that like button if you're still watching this. Let's move on to 3 mistakes you should avoid. Number 1 is trying to time the market. Once you get started in stocks, you'll hear something like buy low and sell high. Those are people who try to time it. They look at a chart and they say, okay, Nike stock went down 10% this week. I think that's the lowest it'll go, so I'll buy it right there. And then what they'll do is they'll buy it at negative 10%, and then boom, it continues to go down. Instead of trying to time the market, what you do is you be consistent and continue to invest and teach yourself while thinking long term. If I buy Nike stock and my plan is to hold Nike stock for 5 years, what does it matter to me that it goes down 10% in one day? I don't care about that. My plan is to hold that for 5 years. A lot of times in investing, you'll have to ignore the short-term noise and continue to focus on the long-term goal. The second mistake you want to avoid is investing without research. Now, just because someone at your barbershop told you that one company is going to blow up, that does not mean that they're going to blow up. Don't just go blindly buy that company just because your barber told you this is the next big thing, or someone on Twitter said, yeah, this is destined to go up. Don't just do that. I mean, you can take what they say into consideration, but always do your own research first. When I first started out here, there were a few channels and they recommended a few stocks. And then of course, I went to go blindly buy those stocks thinking that they're geniuses, and I ended up losing thousands of dollars in the end. So avoid that mistake. The third mistake to avoid is one that even the most intelligent investors continue to struggle with. And that is panicking when the stock goes down. I know it's very hard to put $1,000 in a stock and then you watch your $1,000 turn to $750 or maybe $500. That is hard, but you have to remain calm. Like I keep saying, we're in it for the long term and not the short term. Now, unless you're doing your research and something changed fundamentally about the company, you may want to buy more. Put it like this. If there's a pair of jeans that I like, and let's say those pair of jeans are $100, and then I go back in the store the next week and I see those same pair of jeans and they're $50. I'll be happy, right? Yes. But the thing is, people don't think about stocks the same way. For example, let's say Tesla stock is $100 and I see Tesla and I say, okay, I'm gonna buy that stock for $100. I think that's worth it. Now let's say the next week Tesla stock drops to $50. That means that my money went down 50% already. But here's the thing, if I bought Tesla stock at $100 and I thought it was a good company at 100, why would I not think the same when it's $50? I'm literally getting it cheaper. That's the psychology of investing that a lot of people struggle with. Keep in mind, this is only if after doing your research, you see that nothing changed fundamentally about the company. Now, if I bought Tesla at $100 and then they say, okay, we're no longer selling cars, then it dropped to 50, all right, that's when I might say, okay, I may not want this stock anymore. But if I buy it at $100 and nothing changed at all except the price, then that's when you need to calm down. Don't panic when the value of a company drops. Just remember you're in it for the long term, and every company is gonna have those short-term hiccups. That's it for this video. If you guys found this helpful in any way, please be sure to like the video and hit that subscribe button if you wanna see more videos where I explain investing and finance made simple for the everyday person. Other than that, thank you for watching this. Peace.